methodology that gives me winning trades, let's say 65% of the time. I don't know which of those, of the next 20 trades or 25 trades that come up, I don't know which ones are going to be the winners and which ones are going to be the losers. If I'm going to trade my methodology appropriately, it really obligates me to take every single trade. I can't be picking and choosing my trades based on what I think is going to happen, because hopefully I've already established you don't know. And if you think you know, you're just making it up in your own mind. I'm going to repeat that. If you think you know, you're just making it up. Is everybody all right with what I just said?
Yes.
And so it obligates me to take every single trade that comes up, because I don't know which ones are going to be the winners and which ones are going to be the losers. It means that if I'm having problems, it's because I have a certain expectation about this trade, or about this trade, or about this one. So what if I'm expecting a random outcome? What if I change my expectations? Will I feel differently about it? If I change my expectations, will I feel differently about it? Is there anybody in this room? Does anybody who trades? Let's put I don't think I've ever met anybody who trades who hasn't at least gambled at some point in their lives. Right? What do you expect when you put money into a slot machine and push the button? Good. Well, one of those answers was goodbye. I like that. What else? Loud. If anybody's going to say anything. What are you expecting? Really? On this one? Seriously. What do you expect? You know what you're expecting? You're expecting something to happen, right? You're expecting the wheels to turn. You're expecting something to show up. Now think about what I'm just saying. Because you know what? What I just said is exactly what I expect when I put on a trade.
Good morning, SPDas. The trading floor is yours.
All right, thank you very much, Igor, and thank you everyone for being here. A very good morning to all of you from the western side of the world, and good afternoon from the eastern side of the world. So as we move into the London session, let's get started off with a few wave counts on the euro. Just to give you a quick update, the Solana trade was hitting, it tripped the stop. A quick decline, completing 5 waves. We pushed another trade very quickly, but we'll have to just review the chart as to what it is now doing. Is it a part of an expanded flat, or is it the first impulse of a much larger decline? So sit tight. We'll be reviewing Solana at the end after Bitcoin. But let's get started with the euro, followed by the dollar index, gold, and pound. All right, so euro, the only change that we've seen from the last few hours since the Tokyo-Sydney overlap is that one wave, again, which is quite a bit overlapping. So it's either 3, 3, and 3, or it is, but this drop could be wave A of a corrective decline as well. It also sees it could also be a 1, 2, 3, 4, 5, a leading diagonal. But if we zoom out a bit, the structure is all 3 waves, and that does not allow it to be a leading diagonal as well. So it could be a double a WXY, a combination in the making. I'm still fancying my chances about the corrective waves having possible different shapes. So we don't want to really speculate on which shape it is taking up. The most important point that we want to highlight is the RSI has now bounced off neatly from the 30 zone, and it's backing up about the 35-40 zone. It's only a matter of time. It looks like a lower degree wave 4 in the making, where we still have one more high towards the 580 mark. Okay, what if we are wrong over here? What if this is wave A of a much deeper correction? In that case, it's going to be uh, carving a wave B and then wave C lower. We are already prepared to go long right there. The limit orders are already set around 340, 60 zone. So if it goes higher, we book more partial profits and then buy again lower on the 5 wave decline which we are proposing. On the other hand, if it drops directly from here, that would be even better for us. We can grab that opportunity to go long. All right. So that's the story as we move into the Euro USD. If we go by the trade setup, for those who are positionally long, can continue holding long positions. But of course, I'm pretty sure that partial profits are already booked earlier on. So you can really look around to buy even now, if possible, or around the 350, 60 zone. All right. But one thing is clear: the trading direction does not change with a stop around 1.0200. All right. So that's the story in the Euro USD. Dollar index. Okay, I'm going to shift this chart a bit. We need to push slightly on the right hand side, but the wave structure still remains pretty constructive for a sideways wave 4 and then a decline towards wave 5. So that sideways pullback is still constructive for a potential wave 4. And let me try and see if there is a Fibonacci correlation coming across. I don't know if it's a 38.2%. Normally it should be around 38.2%, where yes, it's almost there, just barely missing the 38.2% slot around 1.10704. But it's okay. We can live with that. All right. And let's have a quick look at the RSI. If it is around 60, more than 60, it's pretty much neat enough for a wave 4 to terminate right around the 60, 63 mark. All right. So what what we would what we would like to do now is remain on the short side, brothers. We've already entered shorts in the dollar index. Positionally, we are partially holding shorts. We can enter fresh even now, 106.84. A short-term view of 105.60 in the making before pullback occurs. All right. So going forward, it looks like dollar index still has one more leg on the lower side before that 5 wave. The reason why we are proposing this 5 wave rally is just here historically. I don't know if I've shown the same in the dollar index, but definitely in the euro. See, when we are talking about the wave principle, it's no rocket science. It is simple mathematics and a few scientific patterns. And there are only a bunch of scientific patterns. There are only a bunch of patterns. They keep repeating themselves. There are no unlimited patterns. And that's why we are able to conclude with a very logical thinking that markets price action are not random. So here it is. When we see wave 1 and then wave 2, you see the three wave move of wave 2, how it goes. That is the first wave. Then you have the second wave. It tips the first wave lower, gives an impression to the traders that they are completely in control, and suddenly it tips on the other side. That is a 3v3 or 5 wave. It is a WXY or a running flat. It's exactly the same pattern we are proposing right now. So you have wave 1 of a larger degree, and then you have a 3-wave rally. Again, you have a 3-wave decline. That 3-wave decline is just one wave away to complete an ABC. You see that fifth wave will complete an ABC again. That ABC needs to shift to the right side a bit. Once you have an ABC, another ABC, there's a high potential chance for a 5-wave rally or at least a 3-wave rally. And then let me take the marker, and then this entire structure would be considered as a combination or a running flat. So it's only visualization and nothing else. Uh, but if you are good at practicing that, the visualization comes pretty easy. So let's see how the price action shifts. I'm really waiting for what this guy is up to in the next move. I mean, including the Euro USD. In a nutshell, dollar index remains bearish with a stop above 109.85 for sure. All right. I propose a 110.30 just in case. Let's give it a chance for an expanded flat as well. And if it's an expanded flat in the making, it's going to retest 109.85. And we don't want to get tipped off when it does so, or if it does so. All right. So Euro USD on the long side and the dollar index on the short side. Please remember, anywhere you put your hand in the dollar index on the short side, or the Euro USD on the long side, with a correct stop loss, 110.30 in the index and 102, or rather 1.0150 for the euro, we are good to go. I mean, it's just a matter of time before you start realizing takes profits there. It's risky to go counter trend, so please do not try uh, selling euro or buying dollar index just in case for a shortcut intraday or so. It's quite risky. This chart is one of the most interesting. Okay, just to clear up a bit of noise and labeling, I am removing the first wave. Okay, that is already 5 waves. We know that. Okay, and here we've got wave 1, and I'm going to shift this wave 2 here, and 3, 4, 5 is okay, and we are also going to do the Elliott extensions. Let's find out where the targets are potentially going. So we have wave 3 here. I'm going to pull that wave 3 a bit lower towards 28.10. Remember, we just pushed another short in the in gold in our terminal, in our portal, sorry, around the 29.15, and that could be wave 4. And let's take a hypothetical wave 5 as well. Let's see where the targets are pushing. So when you have the Elliott method, what you do is you drag through the 3 and then again drag through 4, get the targets for wave 5. So that is the first target, 2813, that's wave 3, and then a slight wave 4. It should be either sideways or triangle, we don't know, because that one looks a sharper wave 2. But tell you what, 2760 could be potentially reached in the next few trading days or sessions. That looks like a neat trajectory for. I think is less. We need to give some angle over here. It's not going to fall in a straight line, correct? So let's give it some angle, and we'll keep changing or we'll keep pushing it on the right hand side if more time is taken. But it looks like gold bears are now pretty much poised for. And tell you what, if the third wave is, and it looks like the third wave is extending, or at least that C wave is extending, extensions are very powerful and they can really surpass all these targets just in a flash. Just in one wave, they can clear all these targets. And it could still be wave 3 actually. All right. So it is hypothetical, but I like doing it because we get some idea. We are getting closer to 2730 up there. All right. We are getting closer to 2730 right there. And it makes a lot of sense because a game of support and resistance, again, it keeps on, it should be taking on supports one after the other. There goes the first support, there goes the second support, there goes the third one, and there goes the fourth one. So it falls in line. Stop loss around 29.55, so potential trade in gold remains absolutely unchanged on the short side from here, uh, around 291115, stop potentially around 2955, and targeting 2813 and 276050. All right. Okay, so let's pick up Bitcoin and then to Solana. The pattern in Bitcoin which is unfolding is it's giving us more confidence. The moment I see this happening, the only thing that could be changing is maybe we've got wave D there and wave E is, I think it's E, but this action is an expanded flat wave 2 in the making. So that is wave 1 and possible wave 2 here. So it's fine. If it's wave 1 and wave 2, then we have potentially wave 3 to be seen on the north side, correct? Expect the rally to materialize from this point. Uh-oh. So the path goes straight up there. There is no change, and just for those who are still joining fresh or for the first time, it's a triangle forming in Bitcoin. Wave A, wave B, wave C, wave D, and pretty much wave E. If wave E is complete, then we should be seeing a much sharper rally. Within no time, prices should exceed 109 and towards 115. The stop loss remains firmly. Ideally, it should go, I mean, below wave A, below 89. That's where we have preferred. You can also place it below wave C. I did normally triangles would not pierce wave C. All right, if it's a bullish triangle. The Bitcoin story remains unchanged. The only change we just saw was in Solana, but we've got it on the long side, and I think it's now beginning to cut loose. We got in around 166 again. So if you're keen to trade Solana once again, you can still go long around 168 with a stop. We have proposed 150. The reason why we are going long, despite the fact that there are five waves, okay, we can clearly count it's one, two, three, four, and five. So the fact remains that it's a five-wave decline. But once again, a five-wave decline can be two ways. Number one, it's a part of an expanded flat, which is a 535 structure. So if it is an expanded flat A, B, and C, then the expanded flat structure is complete here. All right. And if not, and if it is the first wave of, of a much deeper correction, we at least need to see a corrective rally up there, three waves, right? So either ways, a minimum push through the 38.2%, possibly towards the 50%, is on cards now. So it's a good point. It's a good way to take some risk here, targeting around 215 and 250. All right. So that's the story in the Solana. I think we've touched base all instruments. I think the pound is left. So Solana, again, we've gone on the long side, and I think the RS confirming, yes, it is. The lower degree time frames would be confirming more firmly. Yeah, see that bottom, almost a double bottom when prices decline. So it's worth taking a risk. And pound, I haven't seen for a while now. And that is a sideways action. A, B, C, D, E, possible triangle confirm, complete. We should be seeing it one more push higher towards the 27 handle, possibly 1.28 handle as well. Sorry. So we've got wave one, wave two, three, sideways consolidation, wave four, and possible wave five. So remain long, please. Book partial profits around the 27, 28 handle if it reaches from here itself. And then on the corrective decline, we will bring up another price entry. But pound is much strong. It's looking much stronger than euro, and on the other side, the dollar index. All right. So those are the stories as we move into the London session. And we'll be back again after a few hours from now to touch base and pick up from where we left in the New York session 2. And once again, thank you for tuning in. Thank you for taking time to come here live. I'll be more than happy to hand over to Igor. Igor, back to you, brother.
Thank you very much, SPDas. Always a pleasure.
Thank you.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com. ForexLens gives you the edge. Forex